Hello and welcome to Business Today. I am Siddharth Zarabi. On today's episode of Rajniti, we are going to talk about Farmageddon. This is a term that's now being used to describe what is happening on food prices globally, not just in India, but globally. And this situation that has started to evolve for quite some time now is now peaking. And it's not peaking in some small economies, but in the United States, where food prices are inching higher. In fact, inflation, consumer inflation in the United States of America, the world's largest economy, is at a 40-year high. Gas prices have gone up, many farm products prices have gone up, and that's why the overall disruption that we have seen continuously actually after the spread of COVID and the resulting lockdowns is manifesting in much higher prices across the world, especially in what is politically sensitive in many economies, which are food prices. In fact, food prices, rising transportation prices, gas prices are a politically sensitive subject even in the United States of America. And we have seen what has happened as far as global crude prices and these disruptions for so many other commodities that have happened, including edible oil, on account of the Russia-Ukraine war. And prices going up is a matter of significant concern. And this price rise has also led to the Reserve Bank of India expressing concern. In fact, just a few days ago, RBI Governor Shaktikanta Das spoke on this subject. We'll bring you a very small slice of that conversation and then continue this chat on Farmageddon and what are the consequences for India.
Supply disruptions have rattled commodity and financial markets. Given the significant share of the two economies engaged in war in global production and exports of key commodities like oil and natural gas, wheat and corn, palladium, aluminium and nickel, edible oil and fertilizers. I repeated this sentence so that there is clarity in clarity in our communication. Global crude oil prices briefly crossed $130 per barrel, touching their highest level since 2008, and remain volatile at elevated levels despite some recent correction. Global food prices, along with metal and other commodity prices, have also hardened significantly. Risk aversion towards assets of emerging market economies has increased, leading to large capital outflows and depreciating bias in their currencies, that is, currencies of the emerging market economies. These developments have, first, ratcheted up the projections of global inflation, which was already running well above the target in the major countries, and second, will produce sizable adverse impact on output across geographies. The geopolitical tensions have exacerbated at a time when the global economy was grappling with a sharp rise in inflation and consequent monetary policy normalization in major advanced economies. Global supply chain disruptions and input cost pressures are now expected to linger even longer. The resurgence of COVID-19 infections in some major economies in March and the associated lockdowns run the risk of further aggravating the global supply bottlenecks and input cost pressures. World trade and output and hence external demand are likely to be weaker than envisaged 2 months back. Overall, the external developments during the past 2 months have led to materialization of downside risks to domestic growth and upside risks to inflation.
Well, you heard the RBI governor, and that was something that you must have seen in the past, but why is it important and significant now? It's important and significant because the latest reading of CPI in India, the consumer price inflation, is at 6.95% print for the month of March, much higher than the tolerance band and the limit of the RBI, at the upper end of the limit actually, which is 6%. And what does this mean? This means and to reiterate this point, that pressure on the Reserve Bank of India, on the monetary authority to use all instruments available to it to control price rise will now increase. We have already seen the first monetary policy review of the current fiscal, seeing the RBI highlight the dangers of inflation, although it chose to not tinker with rates or its stance at this stage. But I now believe that there will be far higher pressure on the Reserve Bank of India, perhaps even before the June review, which is the second scheduled review for monetary policy. The attached element is also some amount of pressure on the government, both at the center and at the states, to respond to this. Because see, when you have a situation where prices of lemons go up to 300, 350 rupees per kilo, although temporarily it is politically sensitive. Look at what is happening to edible oils, and the percentages really do not reveal the actual extent of price rise. When you look at index level price changes, it sometimes hides what is happening on individual product categories and items where the price increase may be far more than the weighted average increase that the index portrays. So edible oils, for example, vegetables, and those are significant disruptions that are happening. Look at what is happening to transport after the hikes in compressed natural gas, which fuels our shared taxi revolution across the country. So inflation, therefore, is now becoming a key issue that in the next 2-3 months will weigh on both administrative, fiscal policy as well as monetary policy. And there's one more added element which we all have to keep in account, and this is how will the monsoon play out. And for this, I'm going to get you a very small slice of something that Sky Met's Mahesh Palavat told us, and that tells you about how it is expected at this stage that the monsoons will be good, and perhaps they could bring us some good news on the inflation front.
If there is a good monsoon, like normal monsoon, and rainfall is well distributed, and this will certainly help the agricultural community like farmers and kharif crops, particularly the soybean, groundnut, pulses, and paddy crops will have bumper harvest, and the sowing will be on time, and which will certainly reduce the inflation as the prices of commodity and edible oil and these fruits, vegetables, and all the edible items will be reduced.
That was Sky Met talking about the potential positive impact. But the other side of the coin is that most of this inflation is actually imported inflation. And when we say imported inflation, what does that mean? It essentially means that it is coming due to the imports of crude oil, which we are completely dependent on. Most of our crude oil is imported. We do not have enough sources of domestic production, and that is feeding into other second round price increases. The government has very little control over what happens internationally. In fact, we had purchased some amount of Russian crude oil because it was being offered at a discount, and that led to significant political, diplomatic controversy as far as India's purchase of Russian crude oil is concerned. Although, like Foreign Minister S. Jaishankar pointed out very clearly, Europe and the Western world itself has not stopped buying Russian oil. In fact, Russian oil and gas are not under any sanctions after the Ukraine war. Yet, India has been, put under some pressure on account of this. The Foreign Minister got back at the critics, but this is what is imported inflation, and that is putting pressure on our economy. So the next 2-3 months will be very, very significant, because we will have to see how the monsoon pans out, whether indeed it is normal or above normal. The second aspect will be how will crude oil prices behave. If they remain under check, they are just over $100, $101 per barrel, and hopefully should not trend any higher. If they go down, that's good news for India. The third is obviously how the agriculture sector performs. The harvest post the monsoon is going to be very significant for future food price inputs, and therefore the interest rate environment scenario that we will see in the weeks and months ahead will be dependent on the decision that the RBI takes in terms of fighting inflation and fully and finally shifting its focus from boosting growth to also achieving price stability, which is one of the core parts of its mandate. We'll keep track of that and come back to you with more details. Until then, please do share, subscribe and like Business Today. We'll come back with more. If you've been, thank you very much for watching.
If you like the video, do like, comment, share and subscribe.